David, the rand continuing to hold firm around that 774, 775 to the dollar mark. So really taking its cue from those better than expected growth figures from the US on Friday and rising equity markets.
Well, I think, Stephen, the whole scenario plays itself around that the global slowing that we've seen over the last 18 months does seem to be slowing, for want of a better term. And traders now starting to look forward and to try to surmise when we're going to actually see some positive numbers coming out. So the recent releases have not been bad at all, and that's underpinning the confidence that we've seen recently.
Well, just looking at those second quarter GDP figures, which showed a 1% contraction, that was against expectations of a 1.5% contraction. But it's really been driven by government stimulus spending rather than consumer spending. So the US economy is really not out of the woods yet, is it?
Well, that's the big question, Stephen, is when does the sort of stimulus that the authorities have thrown at the problem, when does that feed through into actual job creation, into better consumer demand and into higher growth as a result of that? And that's what traders are starting to focus on, saying that there's so much liquidity in the system now that it absolutely has to feed through. But absolutely, we're not out of the woods yet, and you know, the deflation argument is still very, very loud at the moment.
Of course, the rand's strength is really against the dollar, and we have seen the dollar weakening back to that 143 level against the euro. How's the rand been faring against the crosses and also against the other emerging market and commodity currencies?
Well, the rand's holding its own at the moment. We have seen very good importer demand, which is sort of underpinning any or counting against any strength that we might see. And it's really a question of can we see the euro dollar track through 143 on a sustainable basis, break above that level and head to the 146. Certainly, if that is the case, then the rand can track below 770.
What sort of reaction did we see on Friday to that surprise trade surplus figure out here in South Africa, a 3.2 billion rand trade surplus?
Domestic data, Stephen, at the moment, reaction to domestic data is fairly muted as the focus is all on the international scenario. It was a slight surprise and obviously does give some comfort around the current account deficit. But one must bear in mind that global trade has really weakened substantially over the last 18 months. And as a result of that, our own economy has slowed quite dramatically. And it's not surprising that importer demand has slowed on the back of that.
Of course, we saw that Purchasing Managers Index data out this morning, and our PMI actually deteriorated last month. While we are seeing PMIs improving across the rest of the globe, any reaction to that, or is that just another figure that the rand will shrug off?
Yeah, it's another figure that nobody's really paying much attention to. It just confirms the soft nature of our domestic economy. And as I said, all eyes on the international scenario currently.
How about the MTN Barty talks? They've been extended for another month. Is there any concern in the market that that deal may not happen and that the rand could unwind some of the gains that we have seen?
I think the fact that they've extended talks, I think, to the end of August certainly is going to add some momentum to any kind of feeling around a possible merger. We don't have a lot of color as to the nature and structure of that flow or of that deal, and hence, any sort of inward flow. We will have to wait and see as to the exact details of that trade. But certainly, the fact that they've extended talks does add a little bit of confidence to the possibility of a tie-up.
Now, of course, you were talking about US employment figures a little bit earlier, and of course, those are important for the US economy and for consumer confidence in that market. We are expecting non-farm payroll figures out this week. Do you think they could have an impact on the rand going forward?
Undoubtedly, everybody will be looking for another surprise to the upside. I think the employment figures going forward for the next couple of months are going to continue to struggle. It's hard to find the 250,000 jobs that the US needs to find every month just to break even as far as participants coming into the market. So I think it would be hard to see any surprises to the upside. Certainly, we're not looking for any positive results out of that number, but probably the recent trend to continue, a slowing down of the negative factors. And that's what the market is looking for currently.
Well, what sort of range would you expect the rand to trade in then for this week ahead of that data?
I think for today, particularly, Stephen, 772 seems like a good solid base given the imported demand that we are seeing. Should the euro break above 143 and the dollar continue to weaken on international markets, then that becomes a possibility, and then the rand looks like it could move to about 768 and possibly even 765 on the bottom side. For the top side at the moment, 783 seems like a very good resistance level, so I wouldn't be surprised if the rand stays in those ranges.